Good morning, ladies and gentlemen. Welcome to Amber Enterprises India Limited Q3FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Daljit Singh, Managing Director of Amber Enterprises India Limited. Thank you, and over to you, sir.
Hello and good morning, everyone. First and foremost, I hope you all are keeping safe and healthy. On the call, I am joined by Mr. Sudhir Goyal, our Chief Financial Officer, Mr. Sanjay Arora, CEO of Electronics Division, Mr. Sachin Gupta, CEO of RAC and CAC Division, and SGA, our Investor Relation Advisors. We have uploaded our result presentation on the exchanges, and I hope everybody had an opportunity to go through the same. The consumer durable industry witnessed good growth during the quarter. Despite concerns around the third COVID-19 wave, double vaccination has helped us in driving positive consumer sentiment. The demand was driven by a shift in consumer behavior from price consciousness towards technologically advanced premium products with quality, value proposition and safety aspects. Work from home and stay at home continue to create good demand for the industry as leisure travel is restricted, so certain section of consumers are spending on upgrading consumer durable. Retailers have adopted omni-channel strategy to cater to consumer across channels. Retailers are also offering affordable finance schemes, extended warranty, same-day installation services, which has helped to attract first-time consumers, which is further aiding the demand. Rising raw material prices and supply chain issues continue to plague the quarter. Amber has been able to pass on higher raw material prices to the customers, and channel inventories levels are being managed by effective supply chain planning in line with growth expectations. I am pleased to share that on all metrics, including revenue, EBITDA and PAT, we were able to surpass the pre-pandemic level for the quarter. Another important update during the quarter was on acquisition of a majority ownership in Amber PR Technoplast India Private Limited, erstwhile Passio India Private Limited. This acquisition will help our company to grow its component segment with focus on providing more backward integrated solution in key component of RAC segment, which is cross flow fan along with solution of injection molding component for other industries, which is refrigeration and automobile segment. We are glad to announce the commencement of production at our 3 new facilities. Kari, which is Gujarat, for injection molding components, Chennai in Tamil Nadu for sheet metal component and heat exchanger, and Supa, Maharashtra for our sheet metal components in phase 1. The expenditure incurred for the commercialization of these 3 new plants led to decline in profitability for the standalone operation. However, once the revenue starts flowing in, we expect profitability to normalize. A little update on PLI scheme. During the quarter, Amber Enterprises has received approval for the manufacturing of AC components under normal investment category for a threshold incremental investment of rupees 300 crores. Our subsidiary Ilgin Electronics have also received approval for manufacturing lower value intermediaries of ACs under large investment category for a threshold incremental investment of rupees 100 crores. We believe the production linked incentive scheme approved by the government would help provide a level playing field to domestic players and create an enabling environment for the industry to compete globally. I'll now talk about our divisional performance. Mobility Application Division, which includes Sidwal. With the increase in government thrust toward mobility for all, we believe we are in sweet spot to leverage this opportunity. The expansion of metros in newer cities as well as modernization of railways are creating new opportunities in this space. We are making good progress on new product development for various business categories. Our order book stands healthy at more than around rupees 450 crores. Update on motor division, which includes PICL. We have increased our product offering to our customers by adding new models for both the domestic and international markets. We are also adding new customers in this division. We expect our motor division to double in revenues while also increasing margins. BLDC is currently a very small part of our portfolio which we have recently started. The reliability cycle is going on and we are about to start production. Hence, BLDC would be adding as revenue from both sides in captive as well as also on component solution to our customers in coming financial years. Update on electronic division, which includes ILJIN and EVER. As a part of diversification, we have started production of new age applications like wearable and hearables. We have recently added boAt as our customer. As the market is moving rapidly towards inverter ACs, we are confident of growing our revenue share from this division going forward. There is a good traction due to PLI scheme and we are rightly placed company to give the required solution. We are also getting queries and already onboarded customers for inverter PCB board. We are also getting a lot of queries and approvals are already in process for refrigerator and washing machine and other new products also. So we are hopeful that in electronic division also, we would be doubling the revenue in coming 2 years from now. Component division, which include both AC and non-AC components. Our component division has played a very positive role. Contribution from component division is increased to 54% in 9 months financial year 22 from 50% in 9 months financial year 21. We are adding new products, new customers and new geographies. We have onboarded new customers like Samsung for sheet metal components and heat exchanger and Voltas Beko for injection molding components for washing machine and refrigerators. Our recent acquisition of Amber PR is a part of component division business. Integration is happening smoothly and we expect future revenue growth in Amber PR also. Update on RAC division. Our RAC division is performing in tandem with industry. Industry growth on a year-to-date basis is at single digits. It seems that industry would touch around 6.2 to 6.5 million units this financial year. However, at Amber, we are expected to touch around 3 million units this year. Inventory levels have been normalized. Inverter ACs are witnessing good growth. On the commercial RAC side, we have added entire product lineup of our commercial ductables. We have also started offering full range of our cassette ACs to our existing customers. We expect to outnumber the industry in volume terms in this financial year. To conclude, I would like to reiterate that our constant endeavor would be to increase penetration and increase our wallet share in existing customers, continuously add new customers, create a foothold in the exports market and enhance our products with new technologies by focusing on R&D. I'll now take you through our consolidated financial highlights. In revenue, Q3 financial year 22 revenue stood at rupees 974 crores versus rupees 765 crores in Q3 FY21. 9-month FY22 revenue stood at 2270 crores versus 1432 crores in 9 months FY21. For the quarter, RAC contributed 39% of total revenues, while components and mobility application contributed 61% of the revenues. Operating EBITDA, Q3 FY22 operating EBITDA stood at rupees 74 crores versus rupees 62 crores in Q3 FY21. 9-month FY22 operating EBITDA stood at rupees 163 crores versus rupees 81 crores in 9-month FY21. Operating EBITDA margins for Q3 and 9-month FY22 stood at 7.6% and 7.2% respectively. Q3 FY22 and 9-month FY22 operating EBITDA does not include ESOP expense of rupees 4.17 crores and rupees 11.6 crores respectively. PAT. Q3 FY22 PAT stood at rupees 33 crores versus rupees 28 crores in Q3 FY21. 9-month FY22 PAT stood at rupees 52 crores versus rupees 7 crores in 9-month FY21. At Amber, we are all set to leverage on multiple opportunities. Our endeavor is to grab majority of market share on RAC and component side. We believe this opportunity will further strengthen our presence in domestic market and create a strong foothold in exports market. Now I open the floor for the questions here. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The first question is from the line of Ankur Sharma from HDFC Standard Life Insurance. Please go ahead.
Hi, good morning, sir. Thanks for your time. Just firstly, if you could tell us the volumes of ACs that were sold, during Q3. I think you said fully a number of closer to 3 million. If you could just tell us what was the number for Q3, and if possible, break up into IDU, ODU, and window.
So in total, for the financial year, as I told, we are expected to be nearing 3 million, while on 9 months we have done around 1.1 million numbers. However, we are restricting to give the diversified numbers of ODU, IDU, and due to confidentiality matters.
Okay, fair. But then, sir, because then, so my follow-up would be that you're looking at a pretty steep increase in Q4, right? I mean, you're doing about 1 million odd in Q3, and you're looking at close to 3 for the full year, implies almost 2 million numbers for Q4. So just on the overall demand side, how are you seeing demand there? We did hear about some slowdown in volume, especially in November, December for the industry as a whole. So if you could talk about, where are you seeing this demand? Is it more for you because of new customers, or is it that you expect the industry to also do equally well?
So Ankur, the demand is back to the normalized level now, and in the industry, and we are pretty confident, and our order book looks at we will be crossing around. We'll be doing around 3 million numbers. However, in the industry, if you see, the demand should be back from last year, like it was around 5.2 to 5.5 million. This year, we are expecting that it should do around 6.3 to 6.5 million. So demand is coming back again, and with, of course, the working from home as a new normal, everybody is spending upon the, upgradation as well as the comfort living. And this product is something to the comfort living, and we are hopeful that and third wave now of COVID is also, it's pretty much not hit us that badly as we were expecting earlier, like second wave. So we are hopeful that this should pretty much further add to the demand of the industry also.
Okay, and so just on that piece of whether it is more of market share gains for you, and also are you seeing the benefits of the import ban? I remember you said going into 23 as well, you would start seeing the benefits come through, in terms of the import ban, and therefore you getting a bigger share of, brands who are earlier importing. So is that benefit also flowing through in Q4, or is that more of a FY23 kind of?
So out of all the numbers which we did, like due to the import ban, the phase 1 started with the gas charging.
Yeah.
We have been able to convert into the full-fledged manufacturing for out of that around 2 customers, and remaining 2 to 3 customers would be now converting into the coming financial year into the full-fledged manufacturing. So import ban is definitely playing a good role. But at the same time, those bigger numbers you would be seeing will be added in next financial year looking forward.
Okay. And just one last question, if I may, would be on the
sorry to interrupt, sir. Mr. Sharma, may we request that you return to the question queue? There are participants waiting for their turn.
Sure. Okay, cool. Thanks.
Thank you. We request participants to limit their questions to 2 per participant only. The next question is on the line of Madhav Marda from Fidelity Investments. Please go ahead.
Yeah, hi. Good morning, and thank you so much for your time. I just wanted to understand, like we've added both as a customer for our electronics division. It seems like Amber is, actively moving beyond RAC only as their end market into more of a diversified set of end markets. So could you give us like just your 3 to 5 year outlook on how we expect to grow beyond the RAC division as well, and like what are the growth opportunities and sort of strategies that we are in?
So Madhav, as Amber now we are diversified into 5 business verticals like you've seen, and this is how we are seeing. So one of the verticals is room AC division verticals. Another is components, which includes both AC and non-AC. And third is the electronics, which includes Elgin and Ever. And fourth is our mobility application, which is Sidwal. And fifth is our motor vertical, which is PICL. So looking into all these cylinders, all these 5 verticals are seeing good growth due to multiple reasons in each and every vertical. And we are looking at good growth numbers all in RAC also, where we are adding customers, due to import ban as well as due to more offerings. In electronics vertical also, we are hoping to double the revenue in coming 2 years. Because of increase in our horizon of inverter AC controller board now being approved by various customers. We have also expanded into hearables and variables with both as a customer. Similarly, in our mobility application division is seeing a good growth with a new thrust of air-conditioned coaches as well as different verticals into the more offering of the products. For the mobility application also is on the cards. Similarly, in PICL, we are seeing with BLDC motor coming, which is pretty much we are not offering any solutions over there. Now that is into reliability, and we are hopeful that in the PICL also we should be doubling the revenue. And in components and which includes AC and non-AC components, we are seeing a lot of traction over there. And we have added Samsung as a customer, where we have added for components of sheet metal and heat exchangers. We are also talking to Samsung for further components, maybe of injection molding or other components, and PCB also. And we have added Voltas Beko as customers for refrigerator washing machine. And wherever we are not present for refrigerator washing machine as an offering in electronic division, probably we are offering there also in electronic division. So all our divisions now are seeing towards a huge growth, and we are hopeful that in next 2 to 3 years all these divisions should be pretty much double the size where we are today.
And then each of these divisions has like their own like a business head, and each of them are looking at opportunities across all of the various end markets, right? Rather than just RAC.
Yes, it's a focused approach. Each division is now headed by a CEO. Like for electronics, we have Mr. Sanjay. RAC, we have Mr. Sachin with us. Mr. Udayveer is there for mobility application. So each and every division is now with a focused approach, and we would be looking to expand division as all. So there could be multiple opportunities, whether it is RAC, non-RAC. We would be looking at all across for the expanding the horizon of the division. So it could be like for components, if we get good opportunities, injection molding components. So we would be definitely looking at from that angle rather than only RAC and non-RAC segment. So we would be increasing and giving the solution in each division all across the vertical completely.
Got it. Thank you.
Thank you. Ladies and gentlemen, we request you to limit your questions to 2 per participant only. The next question is on the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. My first question is with respect to the kind of volume growth that we anticipate for the air conditioning market next year. This year you had mentioned it's around 6.3 to 6.5 million. What kind of volume growth we can expect for next year, assuming that there is no lockdown during the peak summer season? And what kind of growth that Amber can anticipate similarly?
So I anticipate that with the now third COVID wave not hitting us, as well as not seeing any future COVID waves coming into, so industry should be better than the pre-COVID levels. So I think so it should be touching somewhere around 7.8 million to 8 million, could be around 7.5 to 7.8 million would be, I would say, a good number to achieve from current 6.2 to 6.5, which would be surpassing the pre-COVID levels. I mean, this is what I feel. So looking into that, now the working from home would be still a new normal, because that's a new normal now rather than linked to the COVID. It would be again, people would be definitely, investing into the comfort living.
Got it, sir. And Amber, would we grow on par with the industry or above the industry? So what kind of growth we can see in terms of volumes?
So as Amber, we have always outnumbered the industry. So here also we would be definitely looking at increasing our market share with the industry and outnumbering the industry as always our endeavor has been.
Got it, sir. My second question is with respect to the commercial air conditioning initiatives that we have taken. What kind of proportion of the overall revenue is commercial air conditioning now? And how much can it grow into over the next 2 to 3 years? And if you can give the same commentary for exports also, will be great.
So for commercial AC, it has just started, and a couple of the offerings we have already given to our customers, samples as well as reliability cycles and all that is going on. While with some customer it has already started in the production. Cassette AC, which was not in our offering as a part of commercial, is also now part of it. So that that is seeing a lot of good traction, because there's no one is offering in the industry today as an ODM solution. So we have already started that offering, and a lot of traction is there. So I would see that the numbers should be growing. However, it would not be it would not be a very big chunk of the revenue as in a percentage point of view as an overall console level of the Amber Group. But yes, these are the numbers. This is a product which we were not offering, and definitely it increases our expands our product offering to our customers, and more we increase the wallet share with our customers too.
Got it. And with respect to exports, sir? Exports also.
So exports, we are already, like we earlier also mentioned, that exports is of course there's a high reliability cycle, and with each country have their own energy norms and energy regulations. So we need to develop the products. So the products for US market now is already under prototyping, and are now been as a prototypes we are offering to our customers. So I should see another 1.5 to 2 years further, we should be able to crack this into the mass production levels. While at the Middle East level, we are seeing some traction, and the product lineup is pretty much there. And now the reliability cycle with the customers, as well as the production orders should start flowing in coming at least 7 to 8 months, or maybe 1 year, around 1 year from now.
Got it, sir. And my final question is with respect to the console EBITDA margin. So are we set for somewhere around 8.5% kind of EBITDA margin over the next 1-2 years, considering the fact that there is a PLI scheme where there will be some benefits, but on the other hand, commodity prices are going up. So what kind of margin that you would be anticipating?
Well, it's very difficult to tell about the percentage level looking into the commodity changes and all that. However, we are confident of maintaining our EBITDA levels as well as increasing in the value terms as we move forward.
Got it, sir. Yeah. Thanks.
Thank you. Participants, we request you to limit your questions to 2 only. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Thank you. Sir, I had a question with respect to the standalone non-RAC component business, right? We've seen a strong growth in that, but if I'm not wrong, that also houses the gas charging element. So if you could just give us a sense in terms of, what's been the contribution of the gas charging part. And, we've generally also seen a very good growth. So if you could just give us some sense on what's happened in this quarter.
So, you are asking about the gas charging, the part or like revenue from gas charging?
Yes, sir.
So on average, we need to get back to you into the gas charging exact numbers as to what revenue or what kind of margins we have got from there. But however, we have done the gas charging is around the 400,000 numbers, which we have done the gas charging so far in first 9 months. And that is not a part of this 1.1 million. That's a separate from 1.1 million.
So which will be in the standalone business itself, right?
Yes.
Okay. So I'll get back to your team for that number. Just, sir, the other question was with respect to the acquisition of, Passio India. Now, I understand that you also had a offering on the cross-flow fan side. So if you could just give us some sense on the past numbers of this company and the rationale that for which you bought this company. Thanks.
So this company is basically is in the leadership position of offering its cross-flow fan, and that is the product which we were not offering as to our customers as a component level. So now with this company, with Amber, we have been able to increase our share of a cross-flow fan with our customer. Historically, last year this company has done at 51 crores of revenue. And we are looking at this year pretty much somewhere around 90 crores of the revenue at the financial year end.
Some sense on the margins?
Sorry to interrupt, Mr. Jain. May we request that you return to the question queue? There are participants waiting for their turn. Thank you. A reminder to the participants, we request you to limit your questions to 2 per participant only. We'll move on to the next question. That is on the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. Sorry, again, I'm asking more on the industry side because your commentary starts talking about a good demand. So when we look at your volume growth, it's down 27%, on a declining base of 5%, and you're saying demand is good. And Q4 run rate, what you guided looks, optically very high. So, and when we look at the retails of ref, washers, everything is on a declining mode for Q3 as per the data. So, just wanted to understand from you is, one, how has been the industry decline for this quarter? Because you always say you always outperform the industry, so I'm assuming on the declining also you would have outperformed it. So how much would have been the industry decline? And second, though January has gone now completely, how has been the confidence of the channel of the OEMs, taking back the inventory, because the temperature is still not, looking that great to procure the inventory and go ahead. And I think now there has been no shortages too much in the system compared to the last year. So if you can throw some light on that, that'll be really helpful, sir, of where this confidence of demand is good is coming back. Thank you, sir.
Okay. So Nitin, post the second wave, everybody was apprehensive on the inventory levels and all that. But a good thing was that there was a very normalized inventory levels post the second wave of COVID. However, as we move forward, there were 2 challenges. One was the QCO, another was the BE rating change, which was leading to a lot of ambiguity because everybody as industry requested to move these forward, looking into the inventory levels as well as looking into the second wave, which has hit us, and so as industry, everybody requested the government, but there was a lot of ambiguity in terms of this BE rating change and QCO till the end of till the October, November basically, which was leading to I would say lot of conservativeness in the industry. However, now that is past us, and third wave was also, everybody was envisaging third wave, and nobody knew that what kind of wave would it be. And now I think so third wave also is pretty much if not past us, but at least we are through this, not too that bad as it was in the second wave. So now everybody is pretty much optimistic about the industry and about the demand, and and that is why we are seeing a lot of a good order book is there with us for this Q4 quarter, and we are envisaging that the industry should be back with a good demand and should hit around 6.3 to 6.5 million numbers, and we should be touching around the 3 million numbers.
So generally, thanks for the update, really helpful. And so generally on the other businesses, when you're entering the ref part, and motor has been our forte and we want to expose in the BLDC. But do you think from a profitability perspective, we already, run a business where we hold a very high market share and run a very thin margin business? I'm talking in percentage terms, not in absolute, because that's the seasonality which gets you growth in the absolute EBITDA. You think from a profitability perspective, you're the last entrant in that space, whether it's variable, whether it's the ref part, and existing vendors hold really big market shares there. So from a profitability perspective to scale up, you think it will take much more time, and it's the existing cash flows of the existing business only will support them, because generally the capex requirement, has been very on a higher side for you, being whether you acquire a company, you put capex there, or whether in the existing business. So if you can throw some light on the profitability perspective on this new business, that'll be helpful, sir. That's my last question. Thank you, sir.
So Nitin, from refrigerator and all that, what we are looking at is to expand our horizon offerings of the components of the refrigerator, washing machine, and not the complete finished product as of now. And where in components the margin levels are in line to the industry standard of the existing components only over there. Rest regarding in terms of capex increasing in terms of the for the offerings of this should be we should be able to support it from our own internal accruals only. This doesn't require a lot of capex. However, at the same time, also if you look into it, that we are primarily into AC side, the refrigerator and washing machine added to that in the same component segment would add us to the better asset utilization only. So as in it creates a good win-win situation for the customer as well as for us, and that is why we are looking into more and more better offering to our customers from the same set of the assets if possible.
Thank you.
Thank you.
A reminder to the participants to limit their questions to 2 per participant only. The next question is on the line of Aditya Bhartia from Investec. Please go ahead.
Hi, good morning, sir. So first thing that I wanted to understand was on gross margins, wherein our performance has been pretty decent, especially given the way commodity costs had moved up. Now, what we understand is that brand owners are struggling to pass on the complete impact to customers. While despite having an ODM business, we appear to have passed on a fair bit of impact to customers. Just want to understand how has that been possible? Because historically also you've mentioned on numerous occasions that typically there's a bit of a delay in passing on increased costs. And is ban on import of refrigerant-filled ACs improving your bargaining power with customers?
So, Aditya, in terms of gross margin, we have been able to maintain our gross margins as we envisaged. And commodity prices, we were able to pass on to our customers because obviously everybody understood that there is a huge impact on the commodity pricing. And with all the new ratings which were coming in, as well as new model lineup coming in, we were able to successfully pass on with our customers, because this is something which we started discussing long time back with our customers in terms of passing on these commodities because there is a huge impact over there, and we were able to successfully make customer understand as well as increase this pass on these commodity changes to our customers. At the same time, the ban on the refrigerant obviously is completely different. That has no no impact on this commodity pricing, or maybe I would say negotiation with the current customers on this commodity, because that is completely different. That is dealing to this commodity price. Obviously, there was a change on the commodity pricing over there also, but that's something we were able to take it from the customers immediately, because that was a part of our contract, that if there is any commodity change, it could be passed on immediately.
But sir, historically we have seen a bit of a lag. This time there has been no lag, pretty much, and especially with customers suffering, with brand owners suffering. How is it that we managed? And going forward also, should we be building in almost similar margins?
No, there was a lag. However, we were able to discuss with our customers that we need to start it ahead of time, rather than just waiting for end of the quarter or and then discussing. So maintaining the discipline, as well as in Q3 also, a lot of commodities were settling down. So that also helped us. And we envisage in Q4 also, like you see that a lot of commodities have pretty much settled down and the pricing have settled down. So there should not be any impact of the commodity. And if and only there is a substantial change, we would be able to go to our customers back and ask for the changes.
Understood. And last question, sir, on...
Mr. Bhartiya, may we request that you return to the question queue?
Sure. Thanks, sir.
Thank you. Participants, we request you to limit your questions to 2 per participant only. The next question is from the line of Bharat Shah from ASK Investment Managers Limited. Please go ahead.
Yeah, hi, Jasbir ji. 2 questions. One, if we consider the current year is the base, that is financial year ended March 22, over the next 3 years, that is from fiscal 22 to fiscal 25, do we believe overall business would approximately double? And if you can share the structural growth driver for each of the verticals, both for the industry as well as Amber in specific. And second question, if you can throw some light on what will happen to profitability as we move along in that next 3 years plus kind of a journey.
Sure, Bharatji, thank you very much. And so, Bharatji, like we are now focusing ourselves as Amber into 5 business divisions: RAC, then electronics, PICL, which is motors, then mobility application and components. So all of these verticals, as Amber, we are in a very sweet spot to capture upon the growth which is in front of us. Specifically, if you see, there are a lot of, if I take division by division or business head by business head, like in room AC with a lot of localization and Make in India and PLI incentives, as well as this working from home culture is leading to a lot of demand locally over here. And as Amber, we are now present in South Side also, which we were earlier not there. With this 3 cities should be operational pretty much in end of July, August, and we should be able to cater to our customers from there also. And we are already present in North. We are now we are also having offering of the entire product lineup with us. So as Amber, we are ready to capitalize upon this growth which lies ahead of us in room AC division. And since we are present everywhere and we are have the complete product lineup and product range in ODM category with our and we can increase the wallet share with the customers as we move forward. Secondly, into the components also, we have added a couple of plants like 2 brownfield facilities, one in Kadi, which started operational. There we are looking at refrigerator and washing machine, and we envisage further inquiries from customers over there like Hitachi and as we move forward also. And in Samsung in Chennai, we started with Samsung over there, where we have added sheet metal and heat exchanger as components for AC and our refrigerator components also as we move forward. And there is a lot of other inquiries also for that components division. So we are looking at and then our injection molding side also is looking at a good growth rate. Good inquiries are there in the pipeline. Similarly, electronics also we see good inquiries for PCBAs of refrigerator, washing machine, air conditioner, inverter controller board now with already approved with a couple of customers, and some customers would be coming onboarded in coming financial year. So we should be able to gain the market share as well as gain the wallet share with all these customers as we move forward. And mobility application, we are already sitting on a handsome order book of around 450 odd crores. And that is something we are pretty strong over there. And recently, with new type of air conditioners required in mobility application, we are already there and as offerings to our customers. We have already onboarded good customers like Alstom and Bombardier in mobility application. So all are similarly in PICL also. The BLDC is something which we were pretty empty over there, and with that offering already there, so RAC, where we were not offering at all any motors in the indoor side, we'll be able to offer that. So each and every vertical should see a good growth, and we are highly hopeful that we should be able to, as Amber, we are present all across pan-India presence. So we should be able to capitalize upon this growth due to obviously Make in India push from the government, due to the demand which has been aggregated as we move forward into the country.
So, Jaspreet,
sorry to interrupt, Mr. Shah. Sir, may we request that you return to the question queue? There are participants waiting for the
this is just the first question, the follow-up that I'm asking. On the next 3 years, from fiscal 22 to 25, supposing our business is 100 in the fiscal 22, do we think it will be more like 200 plus by the time we complete 3 years from 20, and where the profitability would be maintained, improved, or reduced?
So, I mean, as a company, we definitely would be looking forward to grow at the EBITDA level. I mean, we'll be able to try to maintain 25% absolute return on EBITDA levels moving from FY22 to FY25. I think that's what we would like to maintain as we move forward.
25% growth in EBITDA over that 3-year time frame.
Yes.
Okay. Thank you, Jaspreet.
Thank you. Ladies and gentlemen, we request you to limit your questions to 2 for participant only. The next question is from the line of Naval Seth from Emkay Global. Please go ahead.
Thank you for the question, sir. Sorry for harping again on volumes. So if I look at your volumes, which are down like 17% on 2-year CAGR, while industry retail sales are down kind of 6 to 7% over the same period. So were there some delay in dispatches from your end because of the Omicron kind of risk where channel or brands were kind of hesitant to take up the volumes, or because numbers are not telling up in terms of commentary, what you are saying that in demand is normalized but volumes are down 27% YOY.
So thank you, Naval, for the question. So Naval, if you see, like the industry has seen definitely from still not yet gone to the pre-pandemic level. So we were at 7.2, 7.5 million, went down to 5.2, while now it is coming back to 6.5, and we are hopeful that next year, next financial year, the industry should be crossing the pre-pandemic level and reaching to around 7.8 to 7.5 million numbers. So volumes are coming up back now again. Obviously, during last 2 years, there have been a lot of disruption in terms of second wave due to COVID, then third wave in place, as well as also a lot of regulatory changing from QCO and BIS, as well as the BE rating also. Now with all that already done and behind us, so we definitely look forward for a good volume growth as an industry. In the Q4, the order book is healthy for us, and we are hopeful to come close to 3 million mark, which was pre-pandemic. And if you see as industry, definitely the pre-pandemic level has not yet reached, but for Amber, we are already there and looking forward to 3 million mark in the Q4 at the end of the Q4.
Got it. And follow up to this is, sir, to clarify, there were no delay in dispatches or customers are not getting converted from fully built up to only components, as our component business has grown exponentially. So nothing of that sort was there in 3Q, right?
So as of now, we have not seen anything as yet. In fact, there is more and more traction, and in fact now like we are adding and converting the gas charging customers into fully built units. And so 2 of the customers have already been converted this year. Remaining 3 customers would be changed next year, next financial year. So we don't see any changes over here. As well as at the same time, due to Omicron, we have not seen. Yes, there was little halt on in January. There was little halt over there from Omicron perspective. But yes, it is back to normal now, and we have already made up the numbers, which the dispatches have already been again started by the customers.
Got it. And second question on the components, basically, sir, on PICL and Ever and Ilgin, you have stated revenues to double in next 2 years.
Sorry to interrupt, but may we request that you return to the question queue? There are participants waiting for their turn. Thank you. The next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question is, any updates on the PLI you would like to share in terms of how do you foresee the revenues, margins, and capex in both these opportunities?
Sorry, Salgaonkar, can you repeat the question again, please?
Yes, sir. So any updates you would like to share on the PLI schemes, the approvals that you have received, in terms of what kind of revenues, margins, and capex you envisage over the coming years?
So from PLI scheme, as an update, like we have already been approved as Amber in the 300 crore normal investment category, and our subsidiary Ilgin has also got approval in the 100 crore category for the components over there. And now this PLI definitely, this is the year of capex investment, and we should see the benefits coming out of it into the coming financial years as we move forward. So as per the construct of the PLI, this financial year is the financial year for the investments to be done, and the next financial year starting, the PLI would be starting connecting. The incremental sales and all that has to be started from the next year.
Got it, sir. So my second question is again regarding this 3 million volumes that you foresee in FY22. So the difference between 3 million and 1.1 million that we have achieved in 9 months, is it because of the order book from new customers or from the existing customers, and the demand side is looking up much brighter? And do you foresee price hikes going ahead in Q4 as well?
I would say this is a aggregated demand from both our existing as well as the new customers. Like if you see historically also, Q4 is pretty much the largest chunk always, and that is what we envisage this year also. And So this is a complete mix of both the uptake from the current customers as well as the addition of the new customers which we added to our kitty.
And anything on the CapEx?
Sorry to interrupt, Ms. Salgaonkar. May we request that you return to the question queue? There are participants waiting for their turn. Thank you. Ladies and gentlemen, we request you to limit your questions to 2 per participant only. The next question is on the line of Kalpit Narvekar from Alliance Global Investors. Please go ahead.
Hello, sir. Thanks for taking my question. 2 questions on my side. Firstly, if you could share some color in terms of our competitiveness versus the Chinese manufacturers, particularly in the exports market. So US versus US and UAE, what is the kind of parity versus the Chinese manufacturers? And second question is, have you, if you could talk a little bit on the, say, automation initiatives, say on manufacturing or warehousing automation on your side that you've made in the last, say, since COVID?
Sure. So Kalpit, on the competitiveness aspect of the exports, so we are already looking at a couple of export markets like the UAE, the Middle East, as well as the US market. I would say on the component side, we are there already because we are already exporting motors to Middle East, and we have been doing that, and as well as to US now already nearing to start. So there is a competitiveness on the export on the component side. However, on the finished goods side, there is still a disparity over there. But yes, we are looking at there is a mix of products. So there are some products where we are competitive with China, and there are some products where we are not competitive with China as of today. But of course, with PLI in place and localization happening, so we see that this difference should be built upon and should be narrowing down as we move forward and making us more and more competitive. So there is a journey to be traveled. Of course, first is the product lineup and offering to our customers as well as aligning ourselves to the requirement of customers and requirement of the energy regulation of the country. So we are in that phase right now. So we are already doing the prototyping, already making the product lineup ready and all that. However, in meantime, we envisage that with PLI coming in, localization coming in, we should be, and obviously the volumes increasing, we should be becoming more and more competitive as we move forward. On the automation front, the question you asked, yes, we are very cognizant about the automation part and Industry 4.0. That is a new normal as we move forward. So within our company, we have our automation cell, which is moving towards automation and creating our own automation arms, robotic arms, as well as creating various kind of low-cost automation within the plants also. So as we move forward, we are already very focused on the automation because we can see that in order to be more competitive as the volume increases, automation Industry 4.0 would be the new normal as well and new savior. So we are already working on it, and the cell within us, within Amber, who works on automation, is highly equipped and creating the automation opportunities within the group only.
Great, sir. Thank you so much.
Yeah.
Thank you. A reminder to the participants to limit the questions to 2 per participant only. The next question is from the line of Bhavin Vithlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. Just one question from my side. On the refrigerator, you mentioned that you will limit your exposure to the component and largely the common ones that are there for the air conditioner. Could you help us understand your thought process? Why is that so? Because some of your competitor EMS players are already planning for venturing into ODM for refrigerators.
Sure, Mr. Vidali, thank you very much for your question. And so the idea over here is that within our verticals, how we can utilize our assets as well as remain in the verticals where we are present and further diversify and have more asset utilization in the current form only. So that is the reason, and it doesn't require much of capex. While going for the complete ODM or finished product of a product like refrigerator do require a lot of capex. So we have, and we see a lot of opportunities already present here in the component side only of the refrigerator and washing machine. So that is the reason we are looking forward that how we can actually increase our, wallet share within our same customer, and while at the same time maintain a good EBITDA margins over there on the component side. And hence we are restricting to our component strategy and increasing more and more offerings to our customer and bringing more stickiness to our customers on a year-on basis.
Yeah, thank you so much for taking my question.
A reminder to the participants, we request you to limit your questions to 2 per participant only. The next question is on the line of Bhumika from DAM Capital. Please go ahead.
Yeah, good morning, sir. So in terms of, as we scale up in the non-RAC segment, how will the margin profile move? As we've seen this quarter, PICL margins have improved, but Elgin and Ever, while there's a growth in the revenue profile, remain at, at a lower level. So if you can just talk about that. And number 2 is in terms of with the PLI scheme coming up, what would be the capex that we have done so far, and what are we looking for FY22 and up till 24? And gross and net debt if it's possible, please.
So Bhumika, on the margin level, we are charging to as we move forward as we add more and more components and diversify into the components. So that would obviously margin profile would be better. And as I mentioned earlier also that on an absolute basis that we are looking at maintaining 25% absolute return on EBITDA levels moving forward from FY22 to FY25. However, on the PLI side, we are very well in range to the approvals has already been done. From the capex side, we are already there as a capex, and I think so from the investment side, we should get approval and we should be able to get the benefits of PLI as we move forward into the next financial year from the capex side. So this year, we are envisaging capex of around 375 crores on a consolidated basis. And next financial year, we would be looking at a capex of somewhere around 250 to 270 as we move forward into the next financial year. The debt levels on the console level, on the net debt level, console level, we are at 400 crores, and at the year end, we should be seeing somewhere around 300 crore at the net debt levels as we move into the next financial year.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, we request you to limit your questions to 2 per participant only. The next question is on the line of Manoj Gogri from Equirus Securities. Please go ahead.
Thanks for the opportunity, sir. So I have one question. So currently, if you look at within RAC business that we are doing, so of the total IDU, ODU, CVU or window air conditioners, what contribution would be coming from your window air conditioners? Can you give some color over there?
So Manoj, we don't, due to the confidentiality matters, actually we don't disclose the numbers on IDU, ODU and window AC level. But we have a substantial market share, I can say, in the window AC, like it's somewhere around 900,000 to 1 million as an industry. So we have a majority share in window air conditioner as we move forward.
Right. So, sir, my question was actually regarding that, because if you look at recently, we were speaking with a few of the brands, and what they were indicating that probably next year the focus would be lower on window air conditioner. And in that case, should it impact us as well? Because obviously, when you look at some of the larger brands, we are definitely supplying the major chunk to them. So can you throw some light like how the scenario could pan out if brands start focusing lower on window air conditioners?
So window has always been diminishing in the percentage terms only as a total industry only, and same was with Amber also. And we also feel that on a percentage basis, window would not be increasing anymore. It would be staying there only. In the terms of the value, if you look into it, the value terms, it would be pretty much the same as we are today. So it is not in the growth mode over there. However, obviously the growth comes from the split air conditioners, the inverter air conditioners. As we move forward, more and more inverterization is happening. So definitely there would be increase in over there. So obviously on window AC, we don't envisage a lot of growth over there since it has always been there at the value term. It is constant only.
So you don't expect any sharp downslide into window market share in the overall AC side for the industry?
There could be
it should be a gradual one that we have seen.
There could be a little different if customers, obviously if there is a downturn in the window side. However, we are confident that if window is going away, then split would be added. Obviously there would be a replacement from window to split. So that is where we can definitely make up for those gone volumes also.
Sure. Thanks a lot, sir, and wish you all the best.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Daljit Singh for his closing comments.
So with the growth opportunities we foresee on the domestic and export front, along with the government support, we believe we are well positioned to capitalize on this opportunity. Thank you everyone for joining us. I hope we have been able to answer all the queries. In case you require any further details, you may please contact us or our investor relation advisors, strategic growth advisors. Thank you very much for joining in.
Thank you. Ladies and gentlemen, on behalf of Amber Enterprises India Limited, we conclude this conference call. We thank you for joining us, and you may now disconnect your line.